Pull up any financial chart right now. Gold. And I'm not talking about a normal, steady climb. I'm talking about the kind of vertical move that makes you check if your screen's broken. Here's what should freak you out. For decades, gold was the retirement portfolio asset your grandpa recommended. Boring, stable, around 7–10% returns annually if you were lucky. But something changed. In the last 5 years, gold has been clocking 18–20% annual returns. And right now, as I'm recording this, it just hit another record high. So either the entire global financial system is sending us a warning signal, or humanity just collectively decided shiny rocks are worth more than ever. And here's the kicker. I think it's the first one. Let me show you why. What makes this fascinating is that nobody can pinpoint exactly why this is happening. Walk into any trading floor, talk to economists, check analyst reports. Everyone's got a different explanation. Some people blame inflation. Others point to geopolitical tensions. Some think it's just market momentum. But here's what they're all missing. There's a much bigger story playing out behind the scenes. Because when you look at the data, when you see who's buying gold and how much they're buying, a very different picture emerges. And it's not the picture anyone wants to talk about publicly. Today, I'm going to walk you through what's actually driving this gold surge. And by the end, you'll understand why some of the smartest financial institutions on Earth are making moves that suggest they know something we don't. Let's break it down. First, let's kill the most popular theory. Inflation. Everyone's first instinct is to say, well, obviously, inflation is high, so people are buying gold as protection. Makes sense, right? Gold is supposed to be an inflation hedge. Except the timeline doesn't match. Think back to 2021 and 2022. Inflation was absolutely ripping. We saw 7%, 8%, then 9% year-over-year inflation prints. Highest in 40 years. Consumer prices were going ballistic. And you know what gold did? Basically nothing. It sat there around $1,800 per ounce, barely budging while inflation was making headlines every single day. But then, in late 2023 and through 2024, when inflation actually started cooling down, that's when gold decided to take off. It blasted through $2,000, then $2,200. Now we're pushing $2,700. So clearly, this isn't just an inflation story. Something else is driving this move. And when you dig into the data, you find something way more significant than inflation fears. You find a crisis of confidence. Here's what's actually happening. Countries around the world are slowly, quietly, strategically reducing their reliance on the US dollar. Now, this isn't some conspiracy theory. This is showing up in hard data from central banks themselves. But they're doing it in a way that doesn't trigger panic, doesn't make headlines, doesn't cause immediate market disruption. Think about it like this. For 80 years, the US dollar has been the backbone of global finance. It's what countries use for international trade. It's what central banks hold as their primary reserve asset. It's the foundation of the entire system. Trust, permanent. And over the last 2 decades, we've seen that trust erode. Here's the number that should make you pay attention. In 2003, central banks held 72% of their foreign reserves in US dollars. Today, that number is down to 58%. 10 percentage point drop. Doesn't sound dramatic until you realize we're talking about trillions of dollars shifting out of the dollar and into other assets. This isn't a dump. This isn't a panic sell. This is strategic repositioning. Central banks are saying we're not abandoning the dollar, but we're definitely not putting all our eggs in that basket anymore. And where is that money going? Not the euro, not the yen, not the pound. Gold. Let me hit you with some numbers that paint the full picture. In 2022, central banks bought over 1,000 tons of gold. Biggest buying year in decades. People thought it was an anomaly, maybe a response to the Ukraine war, maybe COVID aftermath uncertainty. Then 2023 happened. Over 1,000 tons again. Now people started paying attention. 2 years in a row of massive accumulation. Then 2020, And this is where it gets wild. Central banks are on track to buy even more than the previous 2 years. We're looking at potentially 1,100 plus tons. That's the highest purchasing volume in recorded history. To put that in perspective, in the decade before this, central banks were buying around 400 to 500 tons per year. We've more than doubled that rate, and it's sustained for 3 straight years. This isn't a trend. This is a structural shift. And when you survey central banks about their future plans, over 40% say they're planning to increase their gold purchases over the next decade. 95% expect global gold reserves to continue growing. Here's what that tells me. The institutions that manage trillions of dollars, that think in 50-year time frames, that have access to information we don't, they're repositioning for a future that looks fundamentally different from the past. Let's talk about specific players, because this isn't coordinated, but the pattern is unmistakable. China has been adding to its gold reserves consistently, month after month. They're not making big announcements. They're just quietly accumulating. Poland increased its gold reserves by over 200 tons in just a few years. For context, that's doubling their holdings in a relatively short time frame. Turkey, India, Singapore, Qatar, all aggressively buying. These aren't small players. These are major economies making significant strategic decisions. And here's the thing. These countries don't always agree on everything. They have different geopolitical interests, different economic challenges, different monetary policies, but they're all doing the same thing with gold. That's not coincidence. That's convergent thinking based on similar risk assessments about the global financial system. Now, here's where this gets really interesting, and honestly, kind of confusing. Normally, financial markets work on a risk-on, risk-off toggle. When confidence is high, money flows into stocks, real estate, crypto, growth assets. When fear takes over, money flows into bonds, gold, cash, safe havens. But right now, both are happening simultaneously. The S&P 500 is near all-time highs. Tech stocks are valued at levels that assume exponential growth forever. Venture capital is still deploying billions. The risk-on trade is absolutely ripping. And at the exact same time, gold, the ultimate risk-off asset, is also at all-time highs. This is unusual. This is markets telling us two completely different stories at once. One interpretation, stocks are pricing in optimism, innovation, growth, AI revolution, technological disruption. Another interpretation, gold is pricing in instability, monetary uncertainty, geopolitical risk, potential dollar depreciation. Both can't be fully right, but both are happening. That divergence, that's what keeps me up at night, because it suggests we're in a transition period where the old rules don't fully apply anymore.
So why should you care? Why does this matter beyond just gold go up? Because this is about trust. This is about the architecture of the global financial system. This is about what happens when the dominant reserve currency of the last 80 years starts to lose its monopoly status, not through collapse, but through gradual diversification. The US dollar isn't disappearing, let me be clear about that. It's still the dominant force in global trade, still the primary reserve currency, still deeply embedded in the financial system. But monopoly status? That's eroding. And gold is the evidence. When central banks buy gold at record levels for 3 years straight, they're not speculating. They're not trying to make a quick profit. They're buying insurance. They're hedging against scenarios they don't want to talk about publicly. What scenarios? US debt levels becoming unsustainable, continued weaponization of the dollar-based sanctions, long-term inflation that's stickier than expected, geopolitical fragmentation reducing dollar dominance. They're not betting these things will happen. They're preparing in case they do happen. That's the difference between panic and preparation. And right now, we're seeing preparation.
So here's what I'm watching going forward. Central bank gold purchases, if they continue at this pace or accelerate, that's a clear signal the trend is strengthening. Dollar reserve share. If it continues dropping below 58%, we're seeing the trend accelerate. Geopolitical developments. Anything that increases financial system fragmentation will likely accelerate gold accumulation. And alternative reserve assets. Are we seeing moves into other currencies, or is gold becoming the primary alternative? This is a slow-moving story. This isn't going to resolve in weeks or months. This is a decade-long shift that we're only a few years into. Here's what I want to know from you. Do you think we're witnessing a fundamental shift in global finance? Or is this temporary uncertainty that'll fade once things stabilize? Drop your take in the comments. I read all of them, and honestly, some of the best insights come from the discussions down there. If you found this breakdown valuable, hit the like button and subscribe, because we're going to keep tracking these macro trends as they develop. This is the kind of stuff that doesn't make headlines until it's too late, so staying ahead of it matters. Thanks for watching. See you in the next one.